Hey everyone, heading to the bank to actually share and give my personal financial statement to the bank for year end, and thought I would share a couple of insights and just what I'm learning with my own. One of the things that I always do when I do share my personal financial statement with the bank, I usually go over it with them and kind of explain what's happened over the last year, where I'm heading, what I've accomplished this year. It also gives them comfort as I'm going to be probably asking for more loans, but it also communicates that I'm paying attention to it, watching it, and know what is going on. And one of the principles is what we focus on expands. And so I'm looking at mine. I thought I'd just share a few insights into my personal financial statement. What I do is I look at it, not just the current year, that does give some good information, but looking at it compared to other years. And thought I would just share um, what insights I have, and hopefully it'll help you and make you believe that these are important statements that you focus on. In the personal financial statement, it also has a section where you're listing all your revenues and expenses, which becomes like a cash flow statement, so that you see, you know, am I taking in more money than I'm spending? And what I've been able to do over the last couple of years is start focusing not only on growing my net worth, but also looking at my expenses and my revenues. How do I grow my revenues, but also how do I shrink my expenses? And being able to see that progress over the last couple of years has given me motivation to continue to do it. And so I would encourage you to focus on a good personal financial statement that's really detailed, but then also that has the cash flow, your revenues and expenses. So I have that, and I've been able to do that. And I thought I'd just share a couple of insights over the last year, and just thought I'd share the power of real estate and growing the net worth. In the last year, it's just been amazing to see, and really didn't hardly feel it grow this much because of several things that happened. I was able, just in 1 year, my net worth grew $460,000. That was not from savings of cash. That was actually from building 3 different properties this year. Some of the properties did appreciate over the last year, and my cash position stayed virtually the same. Actually, it was down by $5,000, and so I dug into that. But my net worth actually grew by 460,000 because of my build to rent model, building in that equity, but also my principal pay down. Good debt is debt that you have that other people pay. Bad debt is debt that you have to pay. And the vast majority, I don't even sweat it at night. I do have a what Dion calls a swan account. I do have my sleep well at night account for vacancy, like repairs and capex. And one of the insights I have is this year I finished up that account. I've got now, let me look here in just a minute, but it's about a total of 10 properties, 12 doors. And right now I've been saving up. Now these are brand new, so I'm not saving at 15% because I don't have those kind of expenses. I am increasing it, and I will increase it over the years. But over the last, I've now had properties now for 4 years. I've been able to save up to 28,000 in a reserve account for all those expenses. My goal, as I'm looking at it compared to last year and to this year and where I'm going for 25, my goal next year is to have close to 38, between 38 and 40,000 in that reserve account that will cover those expenses. but I don't sweat it. I don't have trouble sleeping. I have over $3 million in loans out, but I have reserves. I have extra cash. I even have an account for my next purchases. And I was looking at it over the last year and some things that I thought I would share that maybe give you insight. This is the power of having multiple years of personal financial statements. I do it on December 31st. I do it the same way. The balances in the accounts, that's the dollar amount that I put in the for my cash. I do the same thing last year. I thought I was going to be significantly down. It was only down about $5,000, but I'm looking to grow, and I know we all feel that pressure to grow fast. And I was looking back over the last year, and here I am at year 4, and I have 12 rental units. And I should be proud of that, and I really am, of what I've accomplished and what maybe you can do. It's over time, and not to feel that pressure. I've got to get more and more and more quicker each year. We see that on YouTube. I'm fighting against that even myself here at 53. This year, I've determined that I think I need to grow my cash reserves and also build up some cash for building in 26. So I plan to only build one property this year and be saving up for 26. I've got 2 lots, one that I can probably put 4 units on, and then 1 single family. And I think this year I'm going to slow my growth a little bit because I need to make that dirt produce income. And I've got those sitting on for 26. But I want to save up that cash and be able to do the projects in 26. So I'm kind of realizing that's what I need to do. I initially had a bigger goal for 25, and being reasonable, looking at that personal financial statement, I think I need to slow down. Sometimes that's the right move, is slow down, continue to stabilize all the properties, grow my reserves, grow my cash to deploy for 26 in another year, have that much more cash ready to work here in 26. So some of the things I thought about is, we look here as this one rental at a time family, that going sometimes slow is okay. That, especially for me in my 50s, I don't need to push hard and maybe make a mistake because I don't have that time, but I'm learning off of every build still and want to make sure that every purchase, every build maximizes my return. So I'm choosing to slow down in 25, stabilize the 3 houses that I've built in 24, get those renters in there doing well, the cash flow begin building up. Some of the things, it's been interesting to see my net worth grow. And just like in 1 year, it grew by $460,000 in 1 year. And I hope you will experience this too, and it will as your portfolio grows. I didn't feel that. I didn't have to save that to get to 460. It was just through the real estate. My cash was actually the same. I just deployed my cash well on the 3 builds. But it's just neat to see, and I hope you will feel the power of building out a personal financial statement. When I started doing this 7 years ago, I realized that I need to focus on it. Here I was in my mid 40s, almost late 40s. I didn't have that retirement. That's where I made that decision. I've got to get on it. And in the power of, I started building the properties in 2020 and finished the first 2 properties in 2021, and have been able to build a portfolio and a net worth of a couple of $1 million in just that short period of time. And the vast majority, that's not my home. 7 years ago, the vast majority of my net worth was in my home. Now the majority of my net worth is in my rental portfolio, and that the multiple millions of loans that I have, I don't worry about. I'm using the power of leverage with good debt, debt that is paid by someone else. Yes, I do have a personal house. I'm trying to reduce my expenses over this year in 25, and I'll be look forward to creating another video at the beginning of next year and be able to share some progress that I made. But other things I'm looking at, I look at the rates. I've got some things that I'm looking to refinance here in the next 18 months. I'm still in that early stage of the first 5 years. It's difficult, but I see the light at the end of the tunnel. I'm going to be able to refinance here in the next couple of years. I'm making adjustments and actually putting some of my portfolio with Section 8 housing, not all of it, about a third of my portfolio. That should grow revenues. And then doing the refinances, I'm seeing additional cash flow on just those positions here in the coming 18 months, which will create even more cash flow. And just wanted to share some of those insights as you're looking at your portfolio. It gives you motivation to stay focused. As I'm looking at the differences in the debt, my debt was paid down by renters this year. $68,000 was paid off by renters. I'm looking at my loan to value, and I monitor that. That's the calculation that is done on this personal financial statement. I went from 61.9% of debt to leverage to 60.3%. So to see that progress helps motivate you to continue to focus on it. And I thought I would just share those things. It also changes my behaviors and what I focus on throughout the year of spending money, making sure I'm holding my money accountable. Even the money that I keep in cash, if it sits there for any extended period of time, I'm making sure I have it in something that's earning interest, be it a money market account that's, for me, it's in Schwab. I'm making a little over 4.2 right now. I do have a very stable one single stock. Most of my portfolio, my net worth is in real estate. I have a very stable energy stock that is paying me a 9.2% dividend. I'm using that, but I'm also focusing, because I'm looking at this with the cash flow. How do I pay down debts? How do I reduce my expenses and my needs for the year? And what percentage of my revenue for the year is free cash flow? And then I'm even looking at what percentage of my net worth is in cash or cash equivalents. I'm trying to keep that ideally at least 10%, between 10 and 15%. I'm not there yet. I'm only a little over 8% with my cash. It's actually 8.3%. So it gives me focus, and that's why I think I need to have a little more cash in the bank as my portfolio grows right now. Even while I'm growing, I'm realizing I maybe need to slow just a little bit to let the cash in my accounts grow so that I get above that 10% and begin deploying it again in 26, but let my average balance for each year get a little bit higher. But I thought I'd just share those things and really encourage you to grow and focus on that personal financial statement and actually use it, not be a document that you have to fill out for the bank, but look at it and then look at it over the years so that you can see your journey. I started 7 years ago with my personal financial statement. I looked at it today and saw where I was 7 years ago with just a couple of $100,000 in net worth to where I am today. And it's just so encouraging, keeps me motivated. And here, look for the link to that video that I created a few weeks ago. That video has a link in it that you can, in the notes on a personal financial statement, where you can download a free template of that. And I would encourage you to do that. So watch that video, and I have other discussions in there at the end, and talk to you soon. Bye. In conclusion, I thought I'd just do a short video at the end. I delivered my personal financial statement to the banks. One of the things that they brought up that might be helpful to you is they really did appreciate going over the personal financial statement with them, talking about the cash position, my plans over the next year, year and a half. They do appreciate that. It also lets you find out from them what they're thinking. One of the things that we talked about was on your tax returns, making sure you show enough income that they can get loans done. Those are some of the things you've got to think about. That what a common mistake many investors make is they expense everything, and then when they go to do a loan, they don't have the income to be able to get a conventional loan. So as you're looking at preparing taxes and looking over your personal financial statement, making sure you can use depreciation. That is a non-cash event. And say, for example, maybe it's an appliance that went out or an HVAC. Instead of expensing those, you can add those as an asset and be able to depreciate them. It still gets you the expense that you need, but it's with a depreciation entry, and the banks can add that back into your cash flow. Even though you're trying to minimize your taxes, use depreciation as a big tool, not trying to expense too much so that you can't get loans, because the banks have to be able to have the ability to have all their loans audited and be able to justify that you show the income to do the loans. On the personal financial side, they want to see enough equity in those property. Too highly leveraged and too little cash, they're more hesitant to do the loan. Even one of the banks said they look at personal financial statements and really heavily look at them and scrutinize them to determine whether they're going to give loans based off of having a healthy cash position and healthy equity in the properties. And that's why the best practices is try to keep close to 10% in cash or cash equivalents is one of the bank's criteria, what they're looking for, or somewhere at least very, very close. But I thought I'd share that after I met with them, just few of the things that we talked about that might be helpful to you.